Hey traders, Tom Gentile. Welcome to Tom's Trading Room. It is Friday, November 27th, 2015, and I did title this email, You're Welcome, for a reason. Because if you listened to me last week, when I talked about the biggest 3 days in the market, on average, going back over 100 years, we're going to be Tuesday, Wednesday, and today, Friday, then you would have known that this was a very great bullish opportunity in the overall markets. I ended up myself taking out nearly 14 points of the S&P in the Tuesday, Wednesday, and half day that we had today. So let's go ahead and move forward. I want to talk about December, and I want to show you the overall markets and what's happening there. So we're going to pop on over to December for the money calendar. And you can see here, I might have mentioned this last week, but December is mostly a bullish month as well. Now, I want to key you in on a couple of interesting things. Typically, on average, when you go back over 100 years, you'll see that December is one of the strongest months seasonally for bulls. We get typically over a 2% yield out of December. But this is a special year because the year prior to an election, those numbers more than double. All right, so I'm expecting a better than 4% move in the S&P and the Dow on average through the month of December for this year. All right, and based on that, I want to look at some other charts, but I definitely want to be pro-bullish going into this year's Santa Claus rally. All right, what do the four corners of the market have to say? We're going to take a look at those right now. So I'm popping on over into our stock charts on Tom's Trading Room, and I'm going to go ahead and jump this up just a bit so everybody can see it. What we're looking at right now is SPY. This is the S&P 500 ETF, and as you can see, I got two lines on here. I've got the stock chart itself, and I've got implied volatility on the options. As you can see, implied volatility has come down. It made a little bit of a tick up, and I really think the reason why is because just the lack of trading volume that's happening in the markets this week is causing that uptick in price. So, or in volatility, excuse me. We are flatlining. I think that also has to do with the lack of volatility. And so keeping all of this in mind, we do see that there is I think, a huge potential to break out. I do think we're going to need to get above 212.5, right? 212.5, which was back here in July. And then the 211 area, which we saw just earlier this month. If we can get and close above those, then I really do see 220 on the horizon, that 215 to 220 area on the horizon for the SPY. Let's take a look at the next corner, and these are what I consider risk-on positions. TLT. Now, TLT is the bond equivalent, the bond ETF equivalent. I like to see this go down when the stock market is going up. And for the most part, if you see what's going on here over the last couple months, we've gone from an area of 129 on TLT. We bottomed out about 2 weeks ago down here around 118. We've moved higher, but I'm starting to see more and more bearishness. And I think if we get ourselves a good report that's coming in next week, all right, good labor report, we're going to see this drop even more so. And that's what we saw happen last month. We saw that big dip in from the labor report, and that's what you saw right here, where you saw TLT go from 126. The very next day, we were down around 123. That could happen again. We would be back in the teens, and we'd be knocking on the low that occurred just early this month. So I really do believe that lower bond prices mean higher stock prices to a degree. All right, next, let's hop on over to currencies. And I want to look at the Eurodollar currency, which is FXE. So FXE, and I mentioned this on this program not too long ago, but I mentioned on this program that we were going to see FXE hitting par with the U.S. dollar. And so that's really what's kind of happening. If you noticed, just in the last couple of weeks, we've gone from an area of about 106. We're knocking on in the 103s now. I do see this going down to reach 100, which would be par with the U.S. dollar. So typically, a lower euro is not good for the stock market because that means lower euro, higher U.S. dollar, lower stock prices. But I'm not quite sure that's really in play right now. All right. I think the euro is going lower for reasons other than the fact that the U.S. dollar is going higher. All right. I think people are pulling out of the euro. They're investing in the U.S. dollar, and I believe that's the reason why you're seeing the disparity between one currency and another, and that is spilling over into other currencies like the Canadian dollar, like the Australian dollar, etc. All right, so I think short term it's not going to be a problem. I do think that if we continue to see this drop below 100, that might be tough for the stock market to swallow. Lastly is going to be commodities, and we're going to look at the USO. So USO, I like this commodity because what it does is it directly affects the U.S. consumer, and I'll tell you why. We're coming down into an area right now. If you remember back in August and September, USO and crude oil dropped considerably. Crude oil actually went below 40, and USO came straight down. Then it rallied back over a 3-day period, and then it churned. Now it's moving back down again. We're seeing lower lows and lower highs. All right, we closed out the session on USO just above $13.03 today. I do think we're going to take this out. I do think we're going to be down around the 12 area. And here's the thing. Lower commodity prices can mean a couple of things. Number one, it can mean that we're seeing a slowdown in global growth, all right? But you know what it means to me and to to the U.S. taxpayer here? It means lower gas prices. And there's nothing that gives you an instant credit, almost like a tax rebate, than getting lower gas prices. Several stations around the country are now clocking in at less than $2 a gallon. I'm expecting we're going to see that down to $1.50. And that's huge. And that's going to make the U.S. consumer, I believe, spend more. And you're going to see people spending that expected increase of 5% as we go into the holiday season. So what does this all add up to? I believe it's going to be bullishness for December. And take a look, those of you that are members, at this week's newsletter on tomsoptiontools.com, because if you think last week was cool when we were doing the pre-Thanksgiving Day trade, then you're going to love what we got in store for December. All right, guys, you can check us out on the forums. You also have access to us through live tech support, and I'll talk to you next week. Thanks, guys. Have a great weekend.